What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol AAPL for Apple Inc., of course. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We watch the stock regularly over here on the channel. The main thing I would point out is that we did just get a little bit of a congestion day, or digestion day, rather, on top of the prior day's range, which to me is a little bit bullish. However, if we look at the 30-minute time frame, I think we'll see a different pattern there. The reason I am calling it bullish from the daily, though, is that because clearly we did make a new higher high and a new higher low, candle by candle at least, and of course we're closing outside of the prior day's range. However, again, noting where we are on the 30-minute time frame, look at this, right? If we look at this pattern, that of course is a descending triangle. Now you could call it a descending triangle based on what unfolded just today. That flush point is also going to coincide with the breakout point from that shorter term bull pennant right in here. Or you could scrunch up the chart a little bit and just say, you know what, I'm actually going to go against what I'm saying right here and say, you know what, this is just a 30-minute bull pennant forming over the course of time, right? Something that would start to look like this. So there's a number of different interpretations you could take. The main takeaway, and what I would really just hope you get from the video, is the importance of this level right here at 175. As you can tell, regardless of whether or not you want to use that as a flush point and take the trade for lower, or if you're looking for bullish consolidation, that is clearly an area of support that needs to hold into the remainder of the week. Now, if we do get a couple days of consolidation, the market just cools off sideways into the end of the week, then yes, from the daily perspective, it would certainly start to look more like a little bit of a bull flag here. And from there, we would look for the bullish breakout up and over the highs closer to 177.50. So there is that take. But again, the main thing I wanted to focus on today is the importance of 175. If you're going to have one level on your chart, make sure it's that level inside of Apple. We can even go ahead and get rid of this one underneath. That's not really so important anymore. We're going to clean up the fibs as well. And again, here's some scenarios to watch out for. Consolidation, fine. Bullish breakouts are up and over 177.50. If it's bearish, it's going to be a breakdown fairly soon of 175 to get us closer to this level at 172.51. And then, you know, after that, I would reevaluate. I wouldn't get overly bearish on Apple until we break down underneath 168, right? And the thinking behind that would be, okay, here we are in this daily range. We know that we had an incremental higher high here. If it ultimately rolls over, then fine. This is technically your lower high. Reevaluate at 168, because there is always the opportunity it bounces off of it, right? And gives us something that looks like this, in which case, what did I just draw? Touch 1 and 2. There's your neckline for a double bottom, and there's potential for turnaround, right? So that's why you're going to reevaluate at 168, especially noting that the dominant daily trend is also up, right? So we don't want to fight that too much. Those are the main levels I'm going to be focusing on, and the patterns I'll be continuing to monitor here in Apple. If you enjoyed the video today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.